high risk and low risk, which one is more sustainable in the long run and in the short run? Before we go further, this is Jose Ndayondi Comrade. I've been trading since 2016. I've helped a number of students to succeed in trading. Subscribe to our channel to learn more of advanced concepts. So basically, high risk approach is whereby traders tend to use bigger lots to earn more money in the short run or in the long run sometimes. But again, low risk is whereby traders tend to use small lots and sometimes they target small risk to reward ratios. As we can see on this chart, we have a column for return and time. So the red line that you see here on this chart, it indicates that those are traders who have been trading using low risk. And this blue line that you see on the chart, it indicates that traders have been using high risk. So if you look at this red line for low risk, it shows you that in the low risk approach, you may be able to make amount of money in a small way, but over a long period of time, you can be able to make something more. But this one of high risk, you can see them, they make money for quite a while, then later they go back to the drawing board, as you can see on this chart. In reality, high risk approach, yes, can make you money in the short run, but in the long run, you can't be able to sustain it. And yet for low risk, it can be able to make for you more money in the long run. Let me give an example. If you're having $100 in 5 years can become $4.6 million if you decide to make 20% per month on your account. As you can see on this chart, let's assume you began in January with $100, then in Feb, you can see you have now $20 because 20% of $100, that is $20. So in the next month of Feb, it becomes $120. So look at this column. This is the first year as you see on the chart, Jan up to December. By end of the December, you'll have that amount that you can see there. In 5 years, you could have $4.6 million. As you can see, who's more sustainable in the long run? Basically, these traders who are using low risk. Regardless of how much you're risking on your capital, you can be able to make it.